Welcome back to the Crypto Clown World channel. I am your host with the honks, Jason Bruce. We're ready to get honking on in here to the Bitcoin macro picture. Okay? And today I really just want to bring you something that's going to be super important for us in the coming days, weeks, and months. Alright? So, with that in mind, if you enjoy that kind of thing, if you could honk the like button for me and make sure you're subscribed to this channel, hit the bell for notifications. We're going to bring you some amazing content going forward, and this is just the beginning, but I do want to show you what's going on for the intraday picture for Bitcoin. Alright, and we do have the candles pulled all the way up to our base here, where we had our high volume node around that $16,000 area, where we bottomed out just above 15,000 at like 15,500. Okay, you can see we had really what amounts to a long sideways consolidation. There were some ups and downs, but this is really sideways action, while negotiating the 200 daily and 200 weekly moving average. After battling with that, we did finally break out, retest, and now have a larger breakout of that. And you say, well, what's that purple line? That purple line is probably the most important line in cryptocurrency and for Bitcoin right now. Okay, so let's take a look at what that purple line actually is, folks. And I'm going to condense these candles a little bit, so I want you to understand how important this is and where this goes back to. This is a long-term trend line support turned resistance. Okay, this trend line goes all the way back past the panic dump in 2020. Okay, all the way back here to essentially what was the second bottom of this double bottom here in the 2015 consolidation here before a very, very large move. So really this was support for BTC for how long? Going back to August of 2015, and then we finally broke through that September of 22. So for over 5 years, Bitcoin held that as support. And now it is December 2023. And we've essentially been negotiating, trying to flip this back into support for close to a year and a half. And you might ask, well, why were we rejected the other day? It's a combination really of two things. Why do we see this dip back down? It's because we hit this purple trend line, first of all. This is the first time that we've negotiated this line or tried to flip it to support since April. So over half a year since we've actually made it back to that point. You'd say that maybe you're forming somewhat of a bit of a head and shoulders here somewhere. And, well, actually the first time I saw that, so you're seeing it here with me, as I'm going through this, but that looks like breakout and retest of that head and shoulders to me, folks. And what that also amounts to is we now have momentum to move up through this uptrend channel and potentially flip this back into support. So this is the most important line in Bitcoin right now, and it's extremely important that we see follow through here, or we'll face a fairly harsh rejection. And it's going to be really interesting what happens in the coming days, weeks, and months here, because this is a rising wedge, and these rising wedges typically have a bearish bias. But with the way the price action has been in this rally, there have been some moves that I've seen in other coins recently that have kind of looked like this sort of upward cylinder pattern. And what ends up happening is divergences are created, and it allows Bitcoin to essentially diverge out of what looks like some sort of a catastrophic move and start moving back up. And what we saw here was actually a hidden bullish divergence. Okay, I'm going to get rid of our stochastics for just a moment and zero in on this. This was hidden bullish divergence. Okay, you're swinging down on the RSI here, lower in price action. Swinging down on the RSI, lower here, but much higher in price action, confirming two long wicks off the 21 MA. Okay, so with that in mind, when you get confirmation at the bottom of a channel also bouncing off a key moving average support with hidden bullish divergence, it tells you that you're going to take another crack at this line. All right, so this is all just consolidation at this point, above the neckline of this newly developed head and shoulders, and below this long-term trend line, which was support for 5 years and is now turned resistance. So this is all essentially the most important consolidation that Bitcoin has seen since this area here. Okay, so it's going to be very interesting to see if there's any type of rejection up around this area. If we try to break out and then lose this area, what the result could be. And I'm not going to go too far into the conjecture on that, but I do want to try and get us some macro targets before I figure out where we might land if we get a rejection, and that'll be in another video. Okay, so right now I am still bullishly optimistic on price action that we do get some follow through here, and I want to give you an idea of what might happen. So if we take ourselves a nice bars pattern, right, we get ourselves a bar, and the move that we're going to take is from our hidden bullish divergence, okay, which right here is this wick down all the way up to this area here. Let's expand this out a little bit so we can see what we're doing just a little bit better. We want our bar to match. Alright, and we're just going to pull this over, and I think you're going to be pretty amazed, folks, because I've been talking about 50K, right? So if I line that wick up, not only do you see it come right up to the top of this channel, alright, but you're at 48.7. So you're at 48.7, which is pretty much a critical level. If we go back here, the 48.7 or 48.6 area, this is all in confluence of this head and shoulders area before we had a dump down. Now keep in mind too, there's also another very important line that's starting to intersect with this area here, and this is this spider line going back to where we had this head and shoulders, and this is where we dumped from. Okay, so again, this was support flipped resistance, and now this spider line is going to extend out, and you can see where the price action may be moving up here. So it's possible that we come up here, try to come back down, test this as support and fail. All right, because we're going to be moving into our area around the 706 fib. That'll be around 53,000. Okay, our golden pocket here is just above the 50,000 level. All right, so, and it's even possible we come up here, all right, and we move sideways for a little while, and you can see it right now. Maybe we form some type of an ascending triangle, and we see a larger breakout above this spider line. So we'll have to see how Bitcoin's price continues to react, because it's definitely getting to a point where we have to be very cautious about what's going on, because we've had this type of action where, you know, we were in the overbought territory of the RSI for a very long time on the daily, pretty much from about the last week of October all the way through middle of the second week in December. So you know, roughly a month and a half where we were overbought here. Now we've cooled off a little bit. We've created this divergence. There's all this volatility, and it's all being created because of this overhead resistance that we're bumping into. Okay, most people have no idea what's going on here, folks. They have no idea because they're not studying enough of the price action history. They're not studying enough of the support and resistance, and they're not studying enough of the potential scenarios that could play out here. So really importantly is, you know, our fibs here and what's happened historically as these rallies get extended towards the 786, which is even $57,000 area. But as we move back here, all right, in price action, you can see that 2019 we had this nice relief rally up to the 786. After rallying to $20,000, we moved up to 13.9, just wicking above the 786. And if we were to see that type of a move again, well, as I had just stated, that would put us somewhere around $57,000. That would be a pretty strong move. You know, a move to the 706 would be around 53.7, which is also totally possible, because maybe we bump up against this spider line and get rejected. So we have to be aware of all this confluence, these areas where we've been rejected before on the macro. And there is, you know, a scenario where we could come up here and come all the way back down and start to test some of this liquidity, either the 200 daily and 200 weekly as support, or, you know, and people don't want to hear about it, but retest some of these other lower areas. There's a CME gap around 20,000, and there's this area of liquidity around 16,000. That would be maximum pain for a ton of people. But realistically, you know, if we try to look at some of our projections and where our price might go, if we take a look at how this is extended out here, again, this spider line, right? And if we take this spider line here, let's adjust this just a little bit, right? So if we adjust this out, you can see where it's in confluence with our 1.618. We would be looking at just over $100,000. Somehow we flip this, you're looking at massive blue sky breakout territory, and possibly moving into areas that are going to be very, very high. So this is a conservative estimate, all right? I want you to understand how the fibs are set on this. This is not set to log scale, okay? So this is conservative, all right? We could actually see higher price movements, all right? Wow, that was creating kind of an optical illusion for me, but these are all set on the, you know, the same support and resistance. Both these fibs are set from the low at 15.5 all the way up to the high at 16.9. Okay, so when you look at these fibs and you look at how this corresponds to the price action, this fib is set up, if you go into your settings, it's just set up with log scale. Okay, so you can either click that on or you can click that off. And when you take a look at this, it changes how your fibs kind of play out, and you get more of an extension locally on your fibs here. So your 786 without the log is about 57 once again. But if you turn the log on, your 786 is right around 50K. Okay? So it's going to depend on what these institutions are looking at. Are they looking at the log? Because typically, when you look at a larger time frame, you're going to want to use log. Some people use it religiously. Some people do not like to use it for scalping. I think it just depends on how you're looking at your support and resistance. And there's so many different ways to skin a cat in this market, or slice bread, if you will, if you don't want the graphic imagery. But if we look at the log scale Fibonacci extension, that would take us above this spider line up to this $170,000 area. I think once we get up here, you could look at potentially holding this as support, if that's going to be in the cards. We don't see a rejection before that. So some things to consider with the fibs, okay, and some price projections for Bitcoin. All right, and we have to think too about our timeline and where this would project out to. And spring of 2025, that would take you just above $100,000 if we were to adhere to this channel. All right, if we break out above it, keep in mind there's all sorts of blue sky scenarios that could happen. We could see much higher levels, and I'll demonstrate to you why. And it's because in the past we've come up to levels that were significantly higher. Okay, so you can see in the rally leading up to 2017, we surpassed that 1.618 extension quite a bit. All right, and we moved all the way up, pretty close to the range of the 2.618. All right, so when we look at our history there, it does give us the potential to make a larger move. So, if we were to see something like that, and if we were to come up to the top of this, standard fib here, if we were to get the full extension on the standard fib, that would be like $244,000. It's a realistic target. And then if we were to extend out to where this previous fib was at, this previous 2.618, that's $375,000. All right, so there's some interesting fib scenarios that we can take into account here, where we may see a much larger move. Now, there are some very, very reliable analysts saying that we're only going to make a move to right around this area right here. Okay, right around 82, close to $83,000. Okay, maybe even as high as $90,000. Super bullish, super bullish. So with all this institutional and ETF money coming in, $90,000 is what BlackRock is shooting for, right? I don't think BlackRock is in this game for a 5.5 or 6x. It's just me, but maybe I'm wrong. Maybe they're trying to suppress the price of Bitcoin, and maybe they'll be looking at other assets like Ethereum that they can pump and potentially even flip Bitcoin or use to get more Bitcoin, or possibly even gain control of the Bitcoin network, things of that nature. But this is what I'm looking at for I don't want to call it the intraday, but the expanded daily picture and our macro picture for Bitcoin, moving out of 2023 into 2024 and the 2025 likely peak scenario. So some possible targets there, folks. You know, I'll go over those again. The super conservative targets that are out there right now are between $82,000 and $90,000. Just above that, we have the area just around $100,000. It corresponds with this fib extension. It's around 103. Okay, we do have this level up here, which I think is quite attractive, and honestly, it's more than likely the probability is around this 170 area. Okay, but there are other scenarios where we could get a full extension around $240,000, or in a really bullish scenario, even around $380,000. And I do have one chart, and you can check out one of my previous videos here, folks. Bitcoin macro secrets revealed. If you rewind the clock on that one, it's just a few months back. You can see me in that video doing one of these poses. You know, the standard Bitcoin soy face, right? I have a actual target around 420,069, folks. 420.69. It's actually realistically possible, and with a 420 Dogecoin projection being possible too. You can check out my Dogecoin video as well. All things are possible in the crypto space, folks. So some macro scenarios I've got outlined. This, by the way, is the Bitstamp chart. Bitstamp has some history on it, so you can use that one to get a little more of a macro projection, because it does have at least some history going back to, where is it at here? Whoops. It goes all the way back to 2011. So yeah, this is our possible picture, folks. Gotta love it. My name is Jason Bruce. This is Crypto Clown World. On your way out, if you enjoyed this content, folks, please honk the like button for me. Make sure you're subscribed to my channel and hitting the bell for notifications, because there's going to be more of this stuff coming. These scenarios are going to be fluid as we continue to move into the new bull market. Love you all. Have yourselves a fantastic day, and we'll be checking in with you soon. Take care, folks.